How's it going, everyone? Welcome back to another Solana update. I've left it since last week to make another video, but we are actually getting that move up, which I was saying must happen from here, because losing this final level of support would actually form a further macro double top on top of the one that I called very early on. I was telling everyone to get out once this had been lost, because it's also losing a long-term moving average, the 200 EMA. And even though I've drawn this move back up, this is the move that it would need to do in order to stand a chance in sustaining a move up that actually eventually breaks and makes a new all-time high. We all need to understand, with such an aggressive move back down, it is highly unlikely to recover the high. I know that sounds negative, but this is what happens when we create lower lows. Now, when we zoom out on a more macro scale, we are at this final level of support, and that is why we're getting a reaction. That is all it is. In other words, this could be a dead cat bounce. A move up needs to recover this key area. But what if it just pumps close and fails back at the neckline? We've just formed a death cross between the 200 and the 100 EMA. Very negative, guys. We've got the 55 and the 200 crossing over. We've got the 20. We've got all of them crossing under the 200 EMA. This is a negative scenario. As you can see in the past, you want this 200 EMA as the lowest moving average, right? Because it's out of the ones that I use, the highest average. So here's the 55, 100, and 200. I don't have any higher than that. So when it's the top one, this is negative because it's now flipping the macro trend. This is the daily time frame. 200 days is over half a year. So very negative, because it could mean that a failure to recover the $200 area would then suggest that this move up is just a dead cat bounce, that it is just looking to turn previous support now into resistance to confirm the bearish crosses, for it to then be the highest point of the downtrend and then start rolling over. Then the next test would see to be if it can create a higher low once again that's above this low, 112, before losing this key final area, 110 to $130, this key $20 range of support. We need to create a higher low within and above 110, 112. So a move up like this where we get rejected, the hope is that before losing this area, it starts reversing once again, maybe forms like previously this double top, and it took a couple months, maybe a couple months to form this double bottom here. And that's how we can start sustaining a move back up. I really don't believe it's going to happen in one swoop. There are many hurdles up ahead. And what has it been doing in this trend? Because you can see in this trend, there are many arguments to say there hasn't been like a sustained relief rally. And if that's the case, that means that every first hurdle, it's failing. So look how many we have. We're now breaking the shorter term moving averages down here. That's great. Good step in the right direction. A good first step. So next up would be the 55 moving average, that orange one, and then the 100 and 200. I'm expecting a failure around this area, because of course it's just previous support should act as resistance. That's what happens when it's lost. So I'll move up into here, maybe get rejected, need to hold the 20, then start moving into the 100, then hold the 55 and hope that the 20 is there. They should eventually cross over, get a bullish cross, but maybe it just pumps up into and still loses, or maybe before a bullish cross is created, it just rejects once again. So remember at the beginning of the video, there was a path, a move up that pushes through this area and this area, and this area must happen. It's just unlikely that it happens in one move, but essentially by doing that, you're recovering previous support, which has been confirmed as resistance here. It's recovering the neckline of the double top. It's also a head and shoulders pattern. So you're recovering the neckline. You'd argue, oh, you've met the target, because you've also come into macro support of 2024. And so by recovering that, we're back holding this higher low And this was used as a pivot point to create a new all-time high. So you'd be back on that path, but also need to understand just before breaking the high, making a new all-time high, there's one final layer of defense that could actually send price back down into this key higher low that has been recovered. That will be a test. It needs to create a higher low above this. You could see maybe that forms an inverse head and shoulders pattern. We cannot see it lose once again. We can't see it lose at all. Can't, once recovering this, lose it. That would be extremely bearish. You'd have another macro double top. That would give way more validity coming back down. Maybe another bounce fails this time and eventually continuing. Maybe even forming this head and shoulders pattern like that, losing this base and going into a bear market. This is the risk. Until $2.60 is broken, this is going to be the risk. Everyone needs to understand. If you don't believe me, let me try and explain and show you on a different chart why, with such a move down, it could pump from 112 all the way to 260 and go under and lose this all eventually. It's crazy. I know it sounds crazy. Please let me show you the proof. So here is one example, but there are multiple in this same area, and we can go through them individually as well. So you can see at least here, we've got this move down and eventually a macro bounce comes and we see a move that sustains for a month period. Look, April, okay, let's go. It was the end of April. Let's just say May the 1st. And right over here, the 886 retested and then a new low formed from there. And that was the month of June. So imagine every day for over 30 days, we're bullish, accumulating, recovering moving averages. How bullish are we getting? What are we doing with the altcoins? Buying. And then to get wrecked. And the altcoins went down like 60% on this move down, at least 50, especially the smaller that they got. So look, that is the risk. It can pump after looking like it completed an A, B, C, and then looking for continuation. Once the reversal wave is created, the 886, and then we start targeting these areas. But of course, when we're up there, you're going to say, oh, with hindsight, I should have been buying down over here. But as we're getting to that 886, there's no guarantee it breaks. No guarantee whatsoever. Let me just refresh this chart. You can even dissect the moves. Look, there was a move down. The dip could have been done as early as that, because look, the 20th of March, where was this topping out? 8th of April. So almost a month here, climbing up day by day, looking like you're doing the right thing, buying because it was recovering the moving averages, but failed the 886 and went to a new low, extended even further down. We can actually then bring this down. That was the one we were looking at earlier, went to a new low. I'll move it to this high now because there was another completed move down right there. And then you see it pumped up into the 886 once again. This is what everyone needs to understand. And especially with such a move down, guys, with such a move down as well, that is the risk. So it could literally pump into 260 and still fail and head into new lows. And yeah, you might bounce once more from here, but it'd be a low high. That could form a macro head and shoulders pattern. Just keep that in the back of your mind. Obviously, as we're going up at the moment, there's money to be made. Don't get me wrong. This was served as a DCA area. As I said, this has to be the final support, this green box. There has to be a bounce from here. But just making everyone aware, as it got down here with not really a sustained move back up, there's so many hurdles to flip this bullish again. You got the moving averages, you got all three red boxes, and you need that 886 to break. So just keep that in mind. I'm personally going to wait for Bitcoin to break its 886 for me to get involved with these again, because I don't want to get wrecked. Because on this move down, even though I identified the pattern early, got out once the 200 EMA was lost, that's already mine under 190, 180. Where was it up as high as? It was almost $300. Yes, the pattern, it took that long to create, but at the point of losing the 200 EMA and losing the neckline, it's already down 40%. Yeah, I identified it early, but still taking that hit. If I don't want to reinvest thinking, oh yes, this is the bottom, and then get wrecked once again. So just going to wait for the charts to convince me, for the altcoins to convince me they're safe. I know when that is with Bitcoin. We can see once, one day, it will break the 886, flip the 886 to 786 area into support, used as a pivot point to then hit those targets. And we can see that while Bitcoin has entered this correction, and I know this is not a Bitcoin video, but while it has entered this correction, it's not yet lost this. So that means it's actually still on its way to 130. And then you can see with the fibs, if you want me to teach you how to use the fibs, just use the links in the description. I've got an ebook, I've got one-to-one mentorship, but I've also do group workshops on a weekly basis. So everyone as a group that's in my Discord community can join, whether it's Tuesday or Thursdays. And yeah, I'll basically teach you as a group, do it all live, analyze the charts live, of course, but teaching you step by step. Essentially, you can see some confluence, we call it, overlapping. So I've measured this so far, our local bottom at 76. There's still that 886, 786 that needs to break. Like right now, it could just be moving up into there to get down into hit. That's what people need to understand. That could be happening on all the altcoins. But while it is still above this, we've got every right to eventually break this. Obviously, we know there's the risk of doing that, but once that's broken, we got another move up into this area, and we can leverage trade this, of course. Take it back to Sol. In the next up and coming days, we're coming up into 155, and then I'm expecting it to roll over before 176, before that point, just because we've just formed this bearish cross. Whether it's just a short-term rejection and it higher lows above this point, you know, a move up to there and then start coming back down, you're creating like an inverse head and shoulders. We need to, it's not going to recover in one move up. We're going to see rejections, we're going to see pullbacks. We just need them to create higher lows. So I will update as it develops, everyone. Hopefully you found this informative today. You learned a lot. If you want to continue learning, there are those options you see at the bottom of the screen. Links are in the description. Otherwise, continue watching the channel's updates. Turn on that notification bell on if you haven't already. Like, subscribe, and comment to push the algorithm so we can hit 10K. And yeah, see you soon. Cheers.